Hey everybody, it's Pete. Welcome to Stock Trading Pro. More importantly, welcome to Stocks for Breakfast, where we set up the entire week and kind of map out exactly the best opportunities that I believe we have heading into this week. I do want to start out by saying I'm about to discuss. We're going to jump right into those three stocks that have potential short squeeze potential. But I want to make sure everybody understands these are my picks, right? So obviously, everything that we talk about here is for educational purposes. It's up to you to make that final decision, but it is my mission to help you make better decisions, good decisions, ones that you could make more distinctions to stack those odds in your favor. And actually, we're going to talk about those odds today because we have to really dig in a little bit. Are the odds of follow through high right now for bigger profits, or should we be in profit taking mode where we're in a little bit more cash flow type trades? And I'm actually going to put that light back on. It was actually better. Yeah, hang on a second there. So we're going to jump right into it. We're also going to talk about the economic data that's coming out this week, which is very light. We're going to talk about last week's earnings and whether or not we're looking for follow through. But let's jump right into it. Yeah, I just want to first explain what a short squeeze rally is. Sometimes it's called a short covering rally, but in this case, we're going to call it a short squeeze because you need to have the conditions first for a short squeeze to happen. A lot of people talk about any rally. Oh, it's a short squeeze rally. No, you need to have a bearish environment first, which we call bearish stacked order flow, which basically means that a stock is going down. So actually the one that we showed you in the thumbnail today, we actually talked about AMD, and you can see obviously AMD is going down right now, right? So that is the first part of the equation. So there's also another stock we're going to talk about that actually already squeezed to the upside after earnings, but we're going to take a look at that in a minute. So in order to have a short squeeze rally, or a short covering rally is really the technical definition of it, we need to understand why those stocks have the potential to make a fast move to the upside, even though they're currently going down. All right, very, very important to understand. So in order to have a short squeeze, we need bearish environment. So what needs to happen is on the way down, a lot of people are betting on that particular stock going down. And again, you can clearly see here in AMD, the stock's been going down for a while, right? So technically, those traders are short selling. Now, for those of you that don't understand how you actually sell something you don't own, what you're actually doing is you're going to your broker dealer and you're borrowing those shares that from your broker dealer to short sell if you are doing that. So you're actually betting on the way down. Now, when you exit that position, you are technically buying that stock back and it goes back into your broker dealer. So that's short selling and buying it back, right? Now, what the heck does that have to do with a short squeeze rally? And what does that mean, right? So when you exit a short sale, you're covering it, right? You're buying it back, but you're covering, right? And you might have seen this in your broker dealer, or sometimes you want to short sell a stock. Maybe it's going down really hard, like Tesla was for a while. You might see hard to borrow. Hard to borrow basically means that your broker dealer doesn't have it available for you to short sell. But in this case, these stocks that I'm about to point out, pretty obvious that there's downtrends, pretty obvious that there likely will be shares available to short. But here's the key part, and this is, again, we like to have post-it pad moments. This is the part that you want to write down. There are certain price action levels that when they get hit on the way down, if that fails to follow through, that's what sets up a short squeeze rally or a short covering rally. And I want to give you the first example. So if you could think, let's use Shay as an example. Let's say that Shay understands short selling and she's betting on a stock going down. And let's just say, for example, this stock has a really obvious level, and then it just kind of like dips below that level, right? So that's a normal short sale breakdown trade. So it broke down through that level. It had really big short opportunities where the trend was going down, and it pops through that level. So the thing you need to be saying now is what should happen next. And what should happen next is we should see follow through to the downside, because that would mean everything is still okay. But when it's super obvious, it barely breaks down and then rallies the next day. You're like, oh, wait a minute, that's not what was supposed to happen. That is the price action and the scenario where a potential short squeeze can happen. Now, we need to talk about why these stocks have the potential to have really fast gains to the upside. Now, again, I want to be super clear about this. If it's going down, it hasn't quite established bullish stacked order flow yet. So this is a little bit more, let's just say, aggressive trade, because risk is relative to your discipline and the quality of the idea, right? So if these kinds of trades do not follow through, meaning go to the upside, you have to be really disciplined and bang, kick that thing out, right? But let's say they do. Let's talk about why they move so fast to the upside. So let's say Shay bet the stock is going down, right? So as it's going down, she wants it to continue in that direction, but it stops. So if it stops and reverses, like we're going to talk about right here in AMD, right? Obvious big level, this breakdown over here. Let me zoom that out. You can see this breakdown here. And then the very next candle stopped going down. And then Friday actually gapped higher. And now this morning, we're actually up another $3 where the stock is all the way up here at 153 and change. So what we essentially have now is the setup or the potential for a short covering rally. So as we just said, shorts have to get out of that. They buy it back. That's called covering. So when the shorts realize, wow, what I wanted to have happen didn't, they have to buy it back. Now, we might have somebody smart like Tom. Tom is in there saying, well, this stock stopped going down. People who bet on it going down are now technically in need of making a decision, which means they have to buy it. Tom sees this, and now Tom buys it as well. This is the main point. You now have two different groups of traders looking to buy this stock. Short sellers who have to buy it back, and new buyers who are looking to get involved early in a potential move to the upside. So because you have two different groups of people, I'm smiling because these are exciting plays, two different groups of people ready to buy, that's why these stocks have a potential to move really, really fast to the upside. And I'm also going to bring in one other part of this, which is a short float. A short float is the amount of people who are betting that that stock will go down. Now, a high short float is generally anything over 20%. So I just want to give you a little bit of a quick way of finding this, actually, when you are looking at, let's say we'll use Finviz, for example. And let's go over to Finviz. Let's just type in the stock. We're going to look at CVNA first, and we're going to take a look at the short float. So we just explained what it means to be short selling. And you can see anything over 20, we said, is a lot. And CVNA is actually almost 30, which is a big number. So that basically means a lot of people are betting on this stock going down. And you can actually see what ended up happening with CVNA. We'll actually pull it up over here. So it's super easy to see. So this stock was not necessarily in a bearish order flow like it was over here. I want to be clear about that, but I'm going to eventually make a point here. So the first thing to notice here is CVNA gapped up in a monster way, and on Friday got back above the opening price for where it gapped. So that's actually one part of the trade. That's not the two stocks I want to point out, but that's one part of the trade. So not only did it have a big gap up, traded lower, and got back above where it gapped up on earnings, the stock also has a big short float. So for those of you that have been trading for a while, you know that the mother of all short squeeze trades was this guy over here, GME, right? The whole Reddit thing and all those kinds of the Wall Street bets and that kind of thing. That was a short squeeze. So CVNA happens to have a very big short float. Now, this is not a short squeeze, but there are a lot of people on the other side of this trade. So that's one way that this stock has a potential fast move to the upside. Now, I want to be clear about this. One of the things that we do is we always want to look for an optimal entry. And the optimal entry simply means if I am about to buy that stock right now, how much is left in the trade for what the stock normally does? Now, sometimes the stock will go up 5, 6, 7, 8 days in a row, and you're going to end up being late to that entry. In this particular one, I love this idea, but I do think that this particular stock, CVNA, needs to pause a little bit more to set up the next trade. So I want to be clear about that, right? So that's one. I like the fact that it's up at this level. As long as it stays between, let's say, 115 and 120, then the longer it pauses, the more I'm looking for the next trade. But that's not the two short squeezes that I want to talk about. We got a lot to talk about today. The first one obviously is AMD. We just kind of gave you that one, right? So again, if we could map out what happened, it broke down here and failed. Now, when I say failed, this next candle should have kept going down and it did not. That's why this is setting up a buying opportunity for me this week and maybe over the next couple of weeks, at least up towards this 50-period moving average, which has been a very, very big level. And we'll take a look at that in the S&P 500 in a second. So we'll basically be looking up towards that 175 level here. So push down, did not follow through. Short sellers have to exit. New buyers step in. AMD is one of those ideas that I'm looking at. The other one right now is Boeing. Now, this is a very, very similar thing. And again, if we could use Shay as an example here again, Shay liked the idea. It looked like it was going down. Earnings reported over here, big, ugly red candle, a lot of selling. And you're like, oh my gosh, this thing is going down. I'm gonna bet on this thing continuing to go down. I can't wait to see that big candle tomorrow, that another big red candle, and I love it. And then all of a sudden you get a reversal green candle. Literally what you do not want to see. Now, obviously, we got to go a step deeper and we say, well, how is the volume on that candle? Shay's a good trader. Tom's a good trader. Gardner, good trader here as well. Be like, I want to pay attention to see how many people actually participated in that rally. So then we kind of drop our volume in there as well. And we look at this green candle. And if we take a look at it, well above average volume on that reversal. So what does that mean? Does that mean that we just jump in and we start buying this thing? No. It means that something changed. It means all of that selling pressure that the stock has had has now gotten an opposing force. So we broke down after earnings on big volume, took out that obvious level that everybody was watching, and then the next day reversed. So a short squeeze rally potential is also sitting here in Boeing right now. Now, if you've been watching Boeing, BA is the symbol. This stock has gotten beat up really bad. I mean, it was just like bad news after bad news after bad news on this stock, basically for the entire year after this massive bullish rally in the stock, right? So now the question is whether or not that bad news is behind the stock and whether or not the stock now has kind of lifted where the new rally is going to start. We have now just built an argument for two different ideas, AMD and Boeing as potential short squeeze rallies, as well as CVNA, Carvana, having gapped up after earnings with that big list of stocks on the short side. Now, the reason that these stocks have fast potential is because the other side, people who bet on it going down, are in the wrong side right now in a big way. So I want to be clear. These are different trades than stacked order flow. Stacked order flow is how long these kinds of ideas play themselves out. Did buying pressure happen over a day, a week, a month? Can we clearly see nice fluid pushes and pauses? Has that stacked order flow worked its way over into multiple sectors or across time? And I'll show you exactly what I mean by that. So if we take a look at our sector rotation, we can clearly see that sectors with stacked order flow 2 weeks in a row now, consumer cyclical will be a list of stocks that I'd be paying attention to. And these boring old utility stocks also in play. And by the way, I just want to give you one more idea right now that is a stock that showed relative strength while the entire industry group was going down. And what that industry group is solar stocks, solar energy stocks. Most of those stocks have been getting pounded, bearish, not having any good earnings reports. One particular stock did, and that stock is this one, which is FSLR. So FSLR actually reported some pretty good earnings and actually was going up while the majority of the other stocks in the sector were going down, if not going down in a big way. So FSLR is an idea on my radar. Now, one thing I do want to point out here, and this is I understand why this happens, but I am talking about ideas that I am looking at going into this week. I still need to time my way into the entries. I still have to have the right position size going into the entries. You'll actually hear me a lot if you happen to be in our community. You'll hear me talking about position size based on the quality of the idea. It's a really important thing, which, by the way, is something I want to discuss right now. If you don't mind, I'd like to just take 1 second. We get a lot of questions about people wanting to come in and sample what we do. They want to go into the coaching. They want to get in behind the scenes in the coaching, but they want, I guess you could say they want proof that we actually know what we're doing before they sign up. So we actually have a new 14-day profitable trader accelerator. And I want to be clear about this. You can get in there and try it before you buy it. I can't explain it any other way. We've listened to a lot of the feedback. It's a very simple, easy, low price way to get in. You can try everything out for 3 days. And if you find out we deliver, which I know we do, stick around for the entire 14 days. You won't get billed until after 3 days when you've had access to everything. But I do want to show you what's actually in it because I'm actually pretty excited about it. So the first thing is you get all of my private daily alerts, the trades from start to finish, everything. My entire portfolio is in there as well. You get my pre-market game plan meetings, 8:30 every day and Saturday. You get live coaching and mentoring, and you get access to the entire archive of coaching right from day one, which is over 200 hours of coaching in there. And you can also work your way through there. We have a new curated collection of training, which is the best of my coaching and my courses from over the last 24 years, all boiled down. You get all of this. And by the way, once you go through the 14-day accelerator, you actually get to keep lifetime access to that course. So just the course alone, none of the other live stuff, the coaching, the alerts, and all of this stuff matter. Like the course alone is worth being in the community. All right. So you have the course, and then you also obviously get access to my remote trading floor. There's also a couple of bonuses. You get access to my entire portfolio, which at this point is up pretty big this year so far. And you also get my end of year mentoring marathon. And if, like I said, if you haven't been on any of my mentoring calls, that course alone, the mentoring marathon is something we do at the end of the year. That's a 9-hour course in itself. And the most valuable part of that is that it's other members of the community talking about what absolutely did not work, getting away from that so everybody can learn from each other, talking about what did work and produced big profits for them, and then what they want to work on going forward. But I just want to be clear about this. This is something that's super important. There's zero risk. All you have to do is click the link, watch the video, and then sign up. Zero risk, try before you buy. So if you want to get involved in this, again, this is based on feedback from here on YouTube. Click the link below in the video. You'll see it says Accelerator. And like I said, just opt in, put your information, watch the video on the next page, and then sign up. There's absolutely no risk to you for 3 days. You decide it's not for you, no problem. That's completely for you. But if you do decide, you get, again, everything is in there for you. I'd love to see you in there. We just put so much our heart and soul into all of this, and I'd love to see those of you that just want a low-priced way of getting started. And then we get questions all what happens after the 14 days. We have a longer coaching program, but let's not talk about that until you actually go through the 14 days and get access to the course. You keep the course, and you can get access to all the archives of the coaching too. So you can go and find something specific, and you get the replays of the game plan calls and the coaching community and everything like that. So if that kind of stuff is interesting to you, I'd love to see you on the other side. If you have any questions, obviously in the description, you could ask a question for our team as well. Again, this is not a sales pitch. This is just, it's available. If you want to go and watch that video, see what it's all about, get more detail on my strategy, the entire thing, click that link below and go to watch the Accelerator video. And I hope to see you on the other side. If not, we'll always be friends anyway. All right. So I want to map out this week. One thing that happened last week that was very, very significant is we had massive earnings last week. But more importantly, we had this black cloud over the market, which was the economic data coming out on Friday. And the economic data that came out on Friday was the jobs numbers. Now, the jobs number was really important because the Federal Reserve, Jerome Powell, is kind of stuck between, we promised everybody we were going to cut interest rates, but the economy is staying strong, employment is staying strong. And as those two things remain strong, inflation will also remain strong. So because inflation tends to stay higher in that situation, they couldn't cut interest rates because if they cut it, inflation would get out of control and they'd be in a worse problem than they are right now. But what happened on Friday, and the reason that the stock market rallied as hard as it did on Friday, produced this big gap, is because the inflation number, the non-farm payrolls number, the economic data that came out, was actually lower than expected, which basically means it cooled off a little bit. So if economic data cools off, meaning employment and the economy, which is measured by GDP, gross domestic product, if those two things cool off, again, the next report, like last Friday, then that kind of opens the door for the Fed to lower interest rates. Now, the reason the stock market had such a big rally last Friday is because actually going into Friday, there was a lot of talk about the possibility of them actually raising interest rates because of how hot the jobs market was and because of how hot the economy was and because inflation wasn't coming down. And that was kind of spooking the markets, which is actually why we had this sell-off over here, the possibility of them not cutting, but actually the possibility of raising. Now, that kind of steam got taken out of the market with the numbers on Friday. So let's actually map out what that actually looks like, and let's actually discuss, right? So the bulls celebrated a cooler than expected non-farm payrolls, right? Looks great, big gap up, everything looks cool, right? The only question that lingered was if they could stick around for the day. In other words, did they have follow-up after that big gap up? So essentially what we're talking about here, and again, we talk about all this in the community, but I want to give you the full example of what we're talking about. So essentially what we were looking at on Friday was after this big gap to the upside, could we maintain that level? And we drifted down a little bit, but then right around 11 o'clock, the bull stepped up and like, nope, this is still good news. We read all the headlines. We still like it. And basically got right back to where we started, which is actually a positive thing. If we would have gapped up here and just kind of melted down the entire day and got back into the previous day's trading range, all that great news pre-market on Friday would have been kind of washed out the window, but we did kind of hold that, what we call in the community, holding the bid. So let's kind of walk through. Now, this is what I want to do. I want to be super clear about this. These are the kinds of things, I don't care if you're trading part-time, full-time, just started trading last week, you've been trading 20 years. It's critical that you map out what you expect to have happen this week and what that means for how much risk you're willing to take and what kind of profits we're going after. So I just want to be clear about this. And I'm going to use the QQQ as an example right now, that I am still more in what we call momentum profit-taking mode, which means I'm trading a little bit more for cash flow because the big picture is still a little bit sideways. And you can probably see this a little bit better on the daily chart of the QQQ. We're kind of still with this rally and this gap here and a little follow through. We're now in the middle of this box, which is basically started all the way back in February. So what does that mean, right? That's great. We can all read charts. What does that mean? Well, it means that the edge in the market has gotten a little bit lower. So with the edge in the market and the three majors, as we call it, the NASDAQ, the S&P 500, and the Dow, without that foundation being obvious right now, that means that we have to go up one level to sectors and industry groups. For example, technology and healthcare and consumer cyclical, going up one level looking for new ideas. So because that bottom part of the pyramid, and I'm going to show you what that pyramid looks like right now, right here, the bottom part of the pyramid is less clear. So all we're doing now in the community is we're saying, okay, let's go up one level and let's start to look for sector-specific ideas that we can capitalize right now or earnings-specific ideas. So I just want to map that out for you right now to be super clear. My game plan or community game plan for this week, until the stock market major indices actually show a little bit of a better trend that lasts longer than just maybe a week or two, we went longer stacked order flow is the way we call that, then we are leaning more on individual sectors and individual industry groups, kind of like what I just told you before about FSLR in the solar industry group and that stock's earnings from last week. So that's actually two things, industry group and an earnings play that we're looking for follow-up. Now, again, these are ideas. I'm not going out and buying them at 9:30. I want to be clear about that. We have a whole process of mapping out a trade from the entry to the stop loss to when we plan to add shares, what our initial profit target is, and ultimately when we shift over into probably, what we might call the secret sauce, which is the profit maximizer. So every single trade that I call out to the community, kind of like what I just showed you before, the alerts are a part of that 14-day accelerator. You get everything from start to finish. The entry, first of all, why I'm in the trade, all the reasons, the entry, the stop loss, the add share price, the initial target. Now, I want to be clear on this. The initial target is the likely reward potential to start the trade. Because we get a lot of people saying, why are you maxing out your gains there? We're not maxing out our gains. And that's very important to understand. When we say IPT, otherwise known as initial profit target, that initial target is just what we're looking for to accept the risk to put the trade on. So let's use Michael here as an example. So let's say Michael's looking at a swing trade. Thanks for joining us this morning, Michael. I appreciate it. Got to say hello to Simon as well. When you put on a trade, you have to say, this is the risk on the trade, right? So if I'm willing to risk that much on a new swing trade, what is the next likely reward potential for me to justify that risk? That's really, really important. But here's the key. That's just what we're looking to justify to put the trade on and have the initial share size. Once we reach that initial profit target and add it on our way up there, and by the way, adding is very scientific as well. We do it at the same calculated level for each stock. It's a different price because of how fast stocks move, but that's an interesting one, right? Once we hit the initial target, again, certain amount of risk, likely reward that we're willing to go after. Once we hit that likely reward, then we shift over into profit maximizer, which is how we hold on to those trades for the bigger wins. Now, the current market conditions are a little bit less obvious. So that means we are looking into individual industry groups for that underlying strength. So we're talking about right here. Okay. So now I want you to promise me, okay? Sometimes I talk a little fast. I'm an Italian. I'm a New Yorker. I've been trading for a while. I want you to understand that this is very, very simple. If you are willing to risk a certain amount, what is the likely reward for the next move? That's really all we're talking about. You just really need to kind of understand the optimal entry, which is you're buying at the time where the next likely move is to be profitable. That's just a key point, right? So I want to make sure we get through the rest of the game plan for the week. So the first thing I want to talk about is the economic calendar this week and how different it is this week compared to last week. So last week on Friday, especially, is when we had the jobs number. So there was kind of like a big story behind the scenes that everybody was waiting to see how that would play out. And it was kind of like a black cloud, like you could kind of see it was raining coming at you, but it wasn't there yet. This week, we don't have any of that. So what does that mean? That means that we can go into this week knowing there isn't really that much significant economic data, such as GDP reports, job numbers, interest rate numbers. The Fed's also out of the equation as well, right? So that means that the road is a little bit less bumpy this week. So other than earnings in our favorite stocks this week, we are not looking at anything that could kind of like jolt the market in one direction or the other, which is kind of exciting because that means that we are very stock specific in the stock market this week. And it becomes a little bit easier to have increased conviction because we don't see those rain clouds in the big picture coming on. So that means that we're probably going to be looking at some earnings reports and follow-up earnings reports. Now, we got a lot of questions about Apple. So let's actually take a quick look at Apple here and really break this down. Obviously, this was a big move for Apple. And by the way, do you think this was also a short squeeze rally? Look at the move down here in Apple. Went down for one day, and then prior to earnings over here, it started to rally. So that's a good example there of a short squeeze rally as well. But is there an edge in Apple right now? This is really what it comes down to. Remember before I said likely next move. Well, Apple is now stuck in the middle of a year-long trading range. So I just want to be clear for me right now, Apple has zero edge. It's a very short-term trade right now, playing mostly off of the short-term earnings. I think it's exciting. I know all the Apple bullish traders look for this rally to the upside, looking for a little bit of relief from a very, very tough 2024. But as far as an edge where the next move is likely, I just don't see that in Apple right now for me. Now, does that mean there are no ideas? Well, no, not necessarily. We can actually hop on in and take a look at some of the market-leading stocks by sector. So remember, we talked about using the power pyramid, and we're going up to sectors now to find better ideas. So when I'm doing the research at the end of the day, I want to start to map out which stocks in each specific sector have been performing the best over a certain period of time. And you can actually see that here, this list. And this is kind of where we start to focus our ideas on where should we be looking at new trades now with an earnings catalyst. So we can actually use Wayfair as an example, had a monster move to the upside, and now we're looking for buyers to follow up, even though there is a pretty neutral window right now. So really what we need to do is set an alert here for 68, and then I'd probably get a little bit more excited, which is about $5 higher than where it is right now. So let's keep moving our way through the ideas for the day. And as we work our way down, the 50-period moving average becoming a big resistance level on the chart. Obviously, we talked about that last week as well. We talked about the 511 level. So this is a big level that swing traders pay attention to, right? So as we keep working our way through, again, we just talked about the lack of the edge in the big picture, which now means that we need to go sector specific and find some ideas. And obviously over here, utilities is kind of at the top of that list. We've seen real estate stocks perk up a little bit over the last week. And as we kind of work our way across, we just talked about communication services. Financial cooled off just a little bit, just to give you a little bit of a kind of behind the scenes look as well. I'm looking more JP Morgan and Citigroup and Wells Fargo. They've been pretty strong, but right now I'm looking a little bit more towards regional banks, actually. And I could kind of give you one that's kind of on my radar this week, and that's Zion Bank, which also has pretty good financials. You can actually see the market went down pretty decent this year, and this stock has actually kind of held the bid. And I'm looking for this to finally try and get above this 45 level, and then up after that, we're looking at roughly 55, which is a pretty decent percentage gain for that stock. All right. So I just want to continue to work our way through the ideas. Obviously, sector rotation. I'm spending a lot of time talking about sector rotation today. Over the last 5 days, as we just talked about, utilities and consumer cyclical will have some of my focus today. Working our way across into some other bullish sectors. Consumer cyclical, we just gave you two of them. CVNA, which is actually the second strongest stock heading into the week. Working our way over into communication services. Roblox actually bounced a little bit last week as well. And there's the utilities. So there is a bunch of stuff happening this week as far as earnings. So I want to be super clear. Looking at some short covering rallies this week, which is a very aggressive play. It's not for everybody. If you don't understand it, just go back to the beginning of the video, take notes on that. We're looking at earnings specific plays this week. CVNA was one, Wayfair was one. Well, actually, you know what? Let's talk about Tesla. Tesla is actually one that not only did it have a positive pop coming off of earnings, but then Elon Musk followed that up with some positive news coming out of China. So we had a bullish gap on earnings, a bullish gap on that positive news. And actually, it is now firmly in the other direction. And that's actually setting up an optimal entry that I'd be looking to participate in some ideas this week as well. So obviously, there's some ideas that we've discussed, and you can actually see here breaking it down. One of the other ones that I like this week, ANF actually caught a new bid. By the way, if you didn't see what ANF did, for basically about 18 months. I mean, this is just one of the most amazing moves to the upside. I like it better above 136, 135. That's the new level I'm watching. So again, we gave you a bunch of stuff to really consider this week. Get sector specific, looking for the market to get out of this box, earnings specific plays, a little bit more short term. We understood what the initial profit target is compared to the risk. That's very, very important. And when we should be looking to hold a little bit longer. And right now I'm a little bit more in what I call cash flow mode. So it's very, very important to understand the road that you're in. And here's the big thing I want to get across. One of the biggest mistakes by a mile that people make in the market is they believe that the stock market is the same all the time. That's foolish, quite honestly. And when they have that belief, they trade the same way all the time. They try and go after the same profits all the time, big gains. They try and trade bigger all the time simply because the market's open and they want to make a lot of money. But you can't do that. To be smart, you have to think market just like driving, stock market like driving. Sometimes you're stepping on the gas and that's the right thing to do. Sometimes you're in stop and go traffic and it's more, you're going to get to where you want to go, but you got to get there in a little bit of a safer way, a little bit more of a, I don't want to say cautious, but more so you're just not going to be as aggressive, right? And that's the kind of market that we're in right now. So I can't express this strongly enough, okay? What you need to do right now is consider what kind of profits are likely and what is the right risk for the kind of profits that are available right now. And I think we kind of just built a pretty good case that the market, while it rallied last Friday, this is the big picture that I want you to lead with, because this is really, really important. And that's this one. Now, on the surface, Friday looked amazing, right? But this is actually what happened last week. Does that look like a picture of, wow, everything went up last week? The market was up 400 something points on Friday. Everything was amazing. That is not what that looks like. So what you really need to be saying to yourself right now is, I got to go and maybe do an extra 5 minutes, pour your coffee, get your scans going, and say, I got to give a little bit extra 5-10 minutes worth of extra work to go on my treasure hunt for this week to find the best opportunities that I feel conviction to put my hard-earned money in the way. Out of everything I said today, please just remember this one thing. Market conditions change, which means that how much we should be willing to risk should change with it. Sometimes it goes up. Right now, we're kind of a lot less than perfect. And the further we move away from perfect, the less I want to put into the deals, and the more I want to be probably booking profits or adding as it moves in my favor in that kind of opportunity. So the reason I want to bring this up, and it's so important, is that when you don't recognize market conditions change and you trade the same way all the time, really good, hardworking, smart people can kind of like get beat up mentally, get their account beat up, and it doesn't have to be that way. You just simply lower your risk, and you can have a few losing trades, even if you like them. But if they didn't follow through because you lowered your risk in a tougher market, it becomes a lot easier to say, okay, I did what I was supposed to. A couple of losses, big deal. I lost less because I realized we were in traffic and I did not step on the gas. Because when that road opens up and you get past that roadblock and it becomes obvious again, then it's easier for you to be net profitable because you didn't dig that big hole. And that's a really important lesson. I didn't learn that lesson for years. When I finally did, it became a lot easier to be patient, because when you realize what it's costing you to not have discipline, you have discipline quickly because you're like, oh my God, when it's easy, I make money. When it's obvious, I make money. It's the part when it's not obvious, we have to be smart. All right. So we covered a lot today. So if you want to go back and watch it, just hit that replay button. Obviously, everything's there for you. If you could do me a favor, though, if we did a good job today, do me a favor, give us a thumbs up, subscribe. It would mean the world to me. Also, it lets me know that this is the kind of stuff that you really like to watch, because I like to keep coming back with more of the stuff we get good comments from. If you have any follow-up comments to anything we discussed today, leave that comment below. And if you want to join us in the 14-day accelerator, click that link below. Like I said, buy it before you try it. You have 3 full days. You get access to everything. I would love to see you on the other side. Click the link in the description. I think you got to put in your email or something like that. Watch the video, click through, sign up, and I can't wait to see you soon. All right. Have an awesome day, everybody. Make it a great week. Take care.